Thank you for joining today's 1031 Exchange webinar. We're going to hang out for just about 60 seconds and let people finish logging in. I've got a lot of people who are just entering the webinar right now, so hang tight and we will start in about 60 seconds. All right, ladies and gentlemen, let's go ahead and get started with today's 1031 Exchange webinar. You guys have joined in what I think is one of my favorite webinars. It's 1031 Exchange, how to grow your business with 1031 Exchange. And I'm going to be your host today. My name is Leonard Spoto, and I'm joined also with Tim McCoolin from Cornerstone Title. And what we're going to do today is exactly what the title of the webinar implies. We're going to talk about how to grow your business with 1031 exchanges. So before we do so, though, I want to make a couple housekeeping announcements. Number one, if you have questions during the course of today's presentation, please do type your question in, and it will pop up on my computer screen. And Tim and I will try to answer all questions as they are appropriate. And then number two, everybody who's on the webinar today is going to get a copy of all of the presentation material emailed out. So hang tight. It'll probably go out this afternoon. Usually there's a delay of a couple hours while we organize all the data, and then we will get an email with a copy of all the slides to you. And we also record our webinars and we post them to our YouTube page. So if you want to look at this webinar later online, you can do so. All right, so let's go ahead and get started with today's 1031 Exchange webinar. It's Grow Your Business. And again, this is one of my favorite webinars. And the reason why we give this webinar is because my company is a 1031 Exchange accommodator. So we work with a lot of realtors and obviously investors doing 1031 exchanges. So we have a very broad depth of experience when it comes to working with all kinds of people doing 1031 exchanges, realtors facilitating 1031 exchanges. And just so you know, as a 1031 exchange company or accommodator, we're not out there buying and selling real estate. We don't sell escrow or title insurance. The only thing that a 1031 exchange company does is facilitate 1031 exchanges. And what does that mean? Well, it means that number one, when your client does an exchange, we hold all of their sale proceeds because they can't touch the money, right, when you do an exchange. Number two, we're going to prepare all the legal documents that are required. And very importantly, number three, we're going to ensure that the client is in compliance with the 1031 exchange rules and regulations. Now, my company, we've been around for a while doing this. I started this company back in 2006. And I've actually been personally in the business for almost 20 years, but started this company 14 years ago. As an exchange company, we are bonded and insured. We have a tax attorney on staff. He's my business partner. He is a member of the California Board of Accountancy and the State Bar. And then one unique thing about my company is we do provide audit support. So hopefully you don't need it, but we're the only company in the industry that provides our clients with audit support. So we do about 150 exchanges every month. So we're a medium-sized 1031 exchange company. We've been around a long time in the industry, though, so I think we're uniquely qualified to talk to you guys about growing your business with the 1031 exchange. Now, I'm going to go over kind of the magic formula here in terms of going out and getting new listings using the 1031 exchange as a tool. I've also, as I mentioned, have Tim on the phone. He's going to talk you through some really good tools that Cornerstone Title offers to help you develop great farming lists and marketing programs. So really the nuts and bolts of growing your business with 1031 exchange is boiled down into these four things right here. Number one, you need to understand 1031. Okay, we're going to talk about that. We're going to talk about it at a high level because you don't need to be a tax attorney with specialty in 1031 to go out and conduct 1031 exchanges as a realtor. All you needed to know is the high level mechanics. Now, my company, we've got the tax attorney, we've got the 20 years of experience in the industry. So when you have really complicated 1031 exchanges, you're not going to talk to your clients about it. You're going to help them sell and buy real estate, but you're going to bring in the partner that is going to explain all the really tricky tax law stuff. So my goal today is not to give you a master's degree or a PhD in 1031 because as a realtor, you just don't need it. My goal today is to help you understand the basics so that you can go out and do these deals. All right. So number one, very important, is make sure you understand 1031. Number two, I think even more important, is to understand why your clients are going to do an exchange. And we'll go over some of the top reasons. And then obviously, if you want to start doing deals, you've got to market solutions to investors. And notice that I underlined the word solutions because a lot of agents will market themselves. And yes, that is effective. You're going to get deals when you market yourself. But I think more effective is marketing solutions, especially when you're talking with investors. Okay, because investors have unique problems that compel or motivate them to do deals. And if you can capitalize on those problems and provide solutions, you are going to get the listing over somebody who's simply saying, hey, I'm the best realtor in this area, use me. All right, so marketing solutions as opposed to yourself or in conjunction with yourself is going to set you apart from every other agent out there. And then finally, and I think very importantly as well, is you can't do this stuff alone, right? You need to build a top-notch team, and Tim and I are here to convince you that we should be part of your team because we can help you guys grow your business, get more listings, and make more money. All right, so let's jump into it. So first thing, as I mentioned, is you need to have an understanding of 1031. So what the heck is 1031 exchange? Well, I think 1031 exchange is the single greatest wealth building tool available to investors because it is a mechanism that allows you to sell investment or business use properties and not pay your taxes. When you do a 1031 exchange, you can defer capital gains taxes on the sale of your investment or business use property, provided you go out and exchange into another business or investment property, right? So this little provision of the tax code, section 1031, routinely saves my clients hundreds of thousands of dollars in taxes. I've got clients every single day who save $200,000, $300,000, $400,000, $500,000 in taxes on the sale of a rental. Because a lot of my clients, they've owned their property for a long time, right? Maybe they bought it for $100,000. The market has appreciated substantially. They've got a property in a great area, and it's now worth $1 million. Well, if they sell that property, they're going to pay about $300,000 in taxes. Now, I know most of you are not interested in giving $1 to the government, let alone $300,000. So when you show your clients how they can keep the $300,000 in their pocket via 1031 exchange, you become a hero, and they start referring you to all their friends and family. So understanding 1031 exchange is very important. So section 1031, just a piece of the tax code that allows you to sell your highly appreciated investment or business property and defer that tax. Now, In order to do a 1031 exchange, you need to follow some guidelines, all right? I've broken down what is a very complicated piece of tax law into 4 basic requirements, all right? Requirement number 1, when you do a 1031 exchange, you can only do an exchange on a property that qualifies. How does a property qualify for 1031 exchange? Well, it has to have been held for productive use in trade or business or for investment. So what does that mean? Well, it means rental properties, it means office buildings, right? Those are business investment properties. Also, a requirement of the 1031 exchange rules is that properties involved in an exchange need to be like kind. And this can be a source of confusion for a lot of clients. In fact, I got an email this morning that said, well, geez, Leonard, can I sell a piece of land and buy a rental home? Absolutely. Land is held for its future appreciation, or you might be farming on your land, and that is a business use. So land will qualify for 1031 exchange, and if you would like to go out and sell that land and buy a rental home, you can absolutely do that. If you want to sell a rental home and buy an apartment building, that qualifies. And if you want to sell an apartment building and buy an office building, that works as well. So the like kind requirement within the 1031 exchange rules is very, very broad. You can sell land in California and you can buy a rental home in Texas. You could sell in Texas and buy in Ohio. You can sell in Ohio and buy in New York. That's supposed to be a Y. It's a backwards Y. So you have a lot of flexibility. You can go anywhere in the country and you can buy any type of real estate that you want as long as you use it for business or investment purposes. Now, what you cannot do is you cannot sell your property in California and exchange into Mexico or Canada. You have to stay in the United States. So foreign property is not eligible. And the other thing you need to be careful about is the government specifically prohibits inventory from being exchanged. And inventory, when we're talking about real estate, is quick flips. All right, a quick flip, a property that you buy today, you fix up over the next several months, and then you sell it. That is inventory, and that is ineligible for 1031 exchange treatment. All right, so the rule of thumb when you're doing a 1031 exchange is you want to season your property as a rental for at least 1, but preferably 2 years. So put a tenant in the property, collect rent every month from that tenant, report that rental income on your taxes, and do it for 2 years. And if you get audited by the government, there's going to be no question that your property qualified for 1031. Now, there's always some what ifs, right? People ask me, well, geez, Leonard, what if I rented for 2 months and then the tenant bailed and I had 6 months where there was no rental income and then I got another tenant? Well, yeah, I mean, we're going to account for turnover, right? The most important thing is that your intention with the property is to use it as an investment. And the more that you can document that, the less problems you will have with the IRS. The harder it is to document the intention of using the property as an investment because you have no rental income or very sporadic rental income, well, you're going to have some challenges if you ever get audited. So what I like to see is I like to see 2 years of solid rental income where the property is not used for any other purpose but as an investment. Okay, you do that and you're not going to have a problem with the IRS. So rule number 1, make sure your properties qualify. Rule number 2, when you do a 1031 exchange, and this is a big issue. People get confused on this all the time. When you do a 1031 exchange, if you don't want to pay taxes, you need to do 2 things. Number 1, reinvest all of your cash. And number 2, purchase property equal or greater in value. Now, let me give you an example. If you're in contract to sell a property for $1.1 million, you can take out your commission and closing costs. So let's say that's $100,000. What we look at for 1031 exchange purposes is your net sale price. And in my example, that's $1 million. Now, when you sell that $1 million property, you're going to pay off your loan. Let's say it's $400,000 that you had. That's your debt. All right. You're going to have $600,000 in cash. That money comes into the 1031 exchange account, and then you use that $600,000 as a down payment to buy $1 million worth or more of real estate. Now, the way you're going to do that is you're going to still need to get another loan or contribute additional cash, right? So what you're doing is you're purchasing property equal or greater in value. You're moving all of your cash over, and you're replacing your debt with another loan or additional cash. And if you do those things, you don't pay any taxes. Now, some of the people that I talk to on a daily basis say, well, geez, Leonard, I sold the property for $1 million, but I only have $200,000 of profit. So what I want to do is go out and buy a $200,000 property. Ladies and gentlemen, that does not work. Okay? Again, when you do an exchange, you need to replace the value of what you sold and move all the money over into the new property. Very important. Reinvest all of your cash and purchase property equal or greater in value. Now, rule number 3. When you do your 1031 exchange, and this is the most harrowing part of the exchange process, is you have to do it within a certain amount of time. The government gives us 180 days to complete a 1031 exchange. And our time frame starts the day we close escrow on the sale property. All right, so you're going to close escrow on the sale. You have 180 calendar days to go out and buy and close on replacement property. Plenty of time, right? That's 6 months. Most people don't freak out about the 180 days. What is very difficult about the 1031 exchange in today's market especially is what you have to do on day 45. Day 45 is very important because day 45 is the day that you have to submit your identification letter stating in writing what you're thinking about buying. So, on day 45, you have to actually fill out an identification letter. And this is what it looks like, guys. This is an actual identification letter from my company. And our clients on day 45 fill out this identification letter and they state what they want to buy, they sign it, they date it, and then they turn it in. Once this letter has been turned in on day 45, you are committing to buying from the properties listed on the letter. Now, how many properties can I list on my letter? Well, that depends. That depends on which identification rule that you use. If you use the 3 property rule, you can put on your letter 1, 2, or 3 properties. But that's it, all right? So very important, when you use the 3 property rule, you get 3 bites at the apple. If property number 1 gets sold to someone else on day 46, you cannot replace it. If property number 2 burns to the ground in one of these fires we have, you can't replace it. You've got one option left on your letter, and if you cannot buy and close on this property within your time frame, you have no exchange. All right? So very, very, very important when you do your exchanges, you need to identify on time and get into contract on one of the properties you've identified. Now, some of you might be thinking, well, geez, Leonard, I'd like to identify more than 3 properties. Is there a way to do that? Absolutely. You can use what is called the 200% rule for filling out your identification letter. And the 200% rule allows you to identify as many properties as you want. There's no limit on the number. Unfortunately, though, there is a limit on the value. The total value of all these properties, when you add up the value cannot exceed 200% of what you sold. So let's go back to my example here. I sold a property. I was in contract for $1.1 million. And this time we're going to use the gross sale price. We're going to double it because we got 200%, right? And we're going to have a value of $2.2 million for all of this property here that we can identify. So there's no limit on the number, but the value cannot exceed $2.2 million. So that might be 10 or 11 properties out in Texas, right? You get a bunch of $200,000 properties that you identify, and then you close on a handful of them. That is the 200% rule. That is a way for you to identify more than 3 properties. So ladies and gentlemen, there you have it. It's really that simple. Your clients are going to sell a property and they're going to buy a new property. The properties must qualify. In order to defer all of their taxes, they need to reinvest all of their cash and purchase property equal or greater in value. You have 180 days to get your deal done, and you have to identify what you're thinking about buying on day 45. If you remember those basics and you remember my phone number, you are never going to have a problem when a client of yours is doing a 1031 exchange, because you'll be able to answer most of the questions if you remember these 4 things. Anything that you cannot answer, or if you forget everything we talk about today, no big deal. Pick up the phone and do a conference call with me. All right? There is not a question that you or your client will be able to ask me that I probably can't answer off the top of my head. And if I can't answer it off the top of my head, I can probably do some research and get an answer to you in less than 5 minutes. All right, so use us as a team, understand the basics, and then you'll be in a position to start having conversations with investors who might want to do an exchange. And ladies and gentlemen, what compels or motivates an investor to do an exchange? Well, first thing, they don't want to pay taxes. Okay, you have a client that knows they want to sell a rental. All right, you've been talking to them about it for a while. This client, if they know that their tax rate is about 33% and 1/3 of their total gain is going to go to the government, they might consider an exchange. All right, I talk to people all the time who say, I'm not quite sure if I want to do an exchange. My CPA said, my tax bill's not that big. Or my brother-in-law said, it's only 15%. Right? Wrong. When you actually add up all of the state and federal taxes, you're paying a rate of about 33%. And again, ladies and gentlemen, for a lot of my clients, that's hundreds of thousands of dollars in tax liability. So people, when they realize the full impact of the taxes, they're really interested in 1031 exchanges. So number 1, work with or discuss the 1031 exchange with your clients who are listing and selling rental properties, because the 1031 exchange is going to be a great way for them to defer that tax bill. Number 2, if you know your client is interested in building wealth through real estate, the best way to do it is via the 1031 exchange. All right? Do not allow your clients to send 1/3 of their wealth to the government if you know that they are long-term real estate investors who are looking to build their portfolio. All right? Section 1031 allows your clients to use money that would have gone to the government to leverage into bigger and better properties. So if you have clients that you know are looking to build wealth through real estate, talk to them about the power of 1031 and how money that would have gone to the government can stay in their pocket and get them into bigger and better properties. Now, some of my clients are already very wealthy, and those clients generally are looking to protect and preserve their wealth. If you have clients that own a lot of real estate, their primary goal is probably to protect and preserve that wealth. And one of the best ways to do that is to diversify. If you have a client that owns property all in one area, and that area is right next to an open space that might burn, well, you might want to send that person a letter and say, hey, you might want to consider getting out of the rentals that are close to the wildfire danger zones and do a 1031 exchange into a different area. Ladies and gentlemen, this is very important right now, right? We've got the largest wildfires burning all at the same time, like 3 of the top biggest wildfires all burning at the same time. And people who live in those areas or own rental properties in those areas, they may need a diversification plan. They need to protect and preserve their wealth. You do it by going into different geographies, right? Or you do it by getting into different types of real estate. So diversification is key. And we can help you find people who may need to diversify their portfolios. Tim's going to talk about how to use the resources of Cornerstone Title to locate people who own 5 or 10 or 15 properties all in one area who could benefit from a diversification strategy. All right, so very important to think about these things. What about this? Long-term ownership issues. Do you know clients who have owned property for 20, 30 years and are simply sick and tired of it? Well, one of the things that they can do is they can sell that property in a 1031 exchange and exchange into a new property that is easier to manage. Most of my clients, the majority of my clients, are doing exchanges because they're 65, 75 years old, and they want to spend less time managing their property and more time enjoying their life. This is a really big issue for 1031 exchangers. They are looking to get out of difficult to manage properties and into properties that are just easier to manage. Maybe they're closer to home, right? Maybe your client who owns the property in your area doesn't live there. So maybe they could benefit from selling that property and doing an exchange and buying something that's just closer to their home. Okay, very good idea for a lot of investors. And what about this? Exchange out of a fully depreciated property into a new higher value property that can be depreciated. Ladies and gentlemen, did you know that residential income property can be depreciated for 27 and a half years? So if you've owned the property for 28 years, your property is now fully depreciated and there is no more tax benefit of depreciation. I have clients who call me and they say, Leonard, I am selling my property and doing an exchange because my CPA told me to. The property is fully depreciated and I need to go out and buy a bigger new one so I get new depreciation and new tax write-offs. That is a fantastic opportunity because we can show you how to cultivate farm lists of people who might have fully depreciated property and could benefit from doing a 1031 exchange. And then finally, ladies and gentlemen, rent control. All right, statewide rent control is a big issue, and also rent control in specific cities like San Francisco, Berkeley, Beverly Hills. Okay, rent control generally is something that landlords do not like. And a lot of landlords, when they understand how onerous rent control can be, they decide, hey, I'm better off selling that property and getting into an area that doesn't have rent control. So we see a lot of 1031 exchanges from rent-controlled areas into other more friendly, more landlord-friendly areas. So if you would like to cultivate a list of places that have rent control, we can help you find people who own rentals in there who could benefit from your services by selling that property and going and doing an exchange into some other areas. All right, so ladies and gentlemen, these are very important reasons why clients do exchanges. And if you start to have conversations with your clients about these issues, I guarantee you, you will start to get 1031 exchange listings. Now, if you do not have clients that have these issues, we can help you find them. Okay, Tim is going to talk about how to use his resources at Cornerstone Title to find and create farm lists. All right, farm lists of people who have owned property for a very long time that might be sick and tired of it, or they might be out of depreciation. People who own property, a lot of it in one area that might be in a wildfire danger zone and might need to diversify. People who are landlords of California properties but live in Texas. Okay, those people know nothing about California rent control. They might need to sell and get out of California and buy in their own home state. And then lastly, people who are just older and want to spend more time with their grandkids and less time with their tenants. All right. We will show you, Tim will show you how to find these people, and we can actually give you sample letters to mail off to these people. All right. We've got pre-printed letters, and all you need to do is change your name. You can start your marketing campaign tomorrow. All you need to do is get our letters and sit with Tim and get your farm list. Now, when you start marketing to these people, we've got sample letters, but I think it's going to be helpful for you also to create your own solution-based marketing program. Let me give you an example of what I mean by solutions. People who own real estate in rent-controlled areas like San Francisco, some of them are very limited on the amount of rental income they're collecting because of that rent control. Their property is worth a ton, but their cash flow is really restricted. So if you sent that person a letter and said, hey, sell your property in San Francisco, and I can show you a strategy where you can use 1031 exchange to defer all the taxes on the sale and go out and buy $1 million worth of property in Sacramento and triple your cash flow. Ladies and gentlemen, that is a solution that is going to resonate with an investor. Their problem is their paltry rental income. The solution is you getting them into a bunch of exchange properties that triples their cash flow. That is a much more effective marketing campaign than sending your picture and saying, I'm the best realtor, right? Everybody does that. How many people are actually crafting solutions like this for investors? Well, people who are doing it are the people who are getting the listings, all right? That's one example. Let me show you another example. We have a lot of people who own really crappy properties. The properties are in disrepair, they're run down, and the client is thinking, geez, this property, it's on its last legs. Well, guess what? It's probably worth a lot of money in today's market, right? Even if it's a piece of junk. Property values have increased substantially, but your client has a problem. They've got a lot of deferred maintenance. Well, guess what? Let that be someone else's problem. Do a 1031 out of this problem property that requires a lot of maintenance as an owner and get into something that is just easier to manage. All right. If you have clients or property owners that are constantly out working on their property for their tenants, let's get them out of those properties. Get them into something that's easier to manage, that's closer to home, where they don't have to spend their weekends dealing with toilets and termites and tenants and trash. All right. We call those the terrible T's. You've got your tenants and termites and trash, right? Get out of the terrible T's and get into something that is easier to manage. Okay, one of my favorite marketing techniques is to send people who are in rent-controlled areas a copy of the California rent control law in the eviction process for their city. All right. If you have a client who lives in Texas and owns California property, send them a copy of the California rent control law and say, hey, do you know that your property might be subject to California rent control? Have you thought about doing an exchange out of this property and into your home state of Texas? If so, let me list and sell it for you. Okay, fear is a very motivating factor for a lot of our clients. They're just afraid of the hassle of getting rid of their tenant, right? So when you can capitalize on someone's fear to help you get a listing and help them get a better property, that's a win-win for everybody. All right, so use some of these techniques to go out and market solutions to your clients. And then also, when you are marketing yourself, don't forget to tell everybody that you are a 1031 exchange specialist, because when you start talking to people about your expertise in 1031, ladies and gentlemen, you will start doing more 1031s. Now, Jerry took my class about 10 years ago. And after my class, Jerry said, hey, Leonard, do you think it's okay if I put 1031 exchange specialist on my card? And I said, absolutely. If you know how to sell real estate and you know how to buy real estate and you know my phone number, you are a 1031 exchange specialist. So ladies and gentlemen, you guys now are deemed 1031 exchange specialists because you've got the basic fundamentals. You know my phone number. You can do these deals, and there is absolutely no reason you should not put that on your card, because once you do and people know that you do 1031 exchanges, ladies and gentlemen, you will start getting 1031 exchange listings. All right? So that's it for me. I know that there's some questions that have come up, but one of the things I want to do is I want to hand over the microphone to Tim, because Tim is going to show you some of the phenomenal tools that his company has to help you find these people and get new listings. All right, so Tim, go ahead, and I'm going to hand the microphone and the computer screen over to you. So Tim, if you could share your screen. Actually, let me make you the presenter.
Hello, Leonard.
Hey, Tim,
Perfect.
Go ahead and share your screen, and then the whole team here can see what you're doing. And I'm going to go ahead and let you talk now.
All right. Can you guys see that? Can you guys see my screen? Leonard, you there?
Yep, we can see your screen, Tim.
Beautiful. All right. Well, thank you, everybody. Thank you, Leonard, for the opportunity to share our marketing program, Cornerstone Pro 247. My name is Tim Mickulin. And this program, before I start, I want you to all know that this program is available to you. A Cornerstone representative can get you logins so that you can actually have access to this program yourself. And what's great about this program is it gives us property information all over the United States. So not only can we give you access to the program, but you could always call any of the Cornerstone representatives and we can help you with your searches and your farms and get you what you need. So I'm going to dive right into the program. What we do is we enter into the property profile section, and this is where you're going to put your user account name and password. And then once you do that, you're going to come up to a map. And this map area, it happens to be where my office is. It's in Elk Grove. And so depending on where your office is and what office address you put when you're entering your information, it's going to take you to that location. And so for me, sometimes it's a little easier to navigate when I go to road, because I can see the major highways and I can cruise all over the place. I can actually go to anywhere in the United States and pull up property information, and it will give me a parcel name and who owns it and everything about that property. So I can pull down here and actually click on this property. We are in Nevada, and I can pull up information and get a report from it. So great program to get information on property all over the United States. Okay, so Leonard shared with us some great ways of generating business. I'm going to share with you, use some of those examples and how to use our farming tool to do that and target these people. So the example, Leonard gave us an example on depreciation. Property owners, investors, they're allowed up to 27.5 years to depreciate their property. And for some people, that could be income of, it could be $100,000 a year. It could be $25,000 a year that they're using as income, and they're depreciating it. Well, like he said in his example, if they have an accountant, they tell them, hey, it's time to sell your property and go purchase something new so that you can then depreciate that and use that as income. So what I'm going to do is I'm going to switch over our program to farms. And this is where it gives us some search criteria where we can start narrowing in on the target we're looking for. So let's do this. I always choose single family residences. Let's choose that. Let's go to absentee owner. Let's go down to sale date when they purchased this property. So what I like to range is I like to range 26 years ago to 30 years. That way you're already starting the dialogue and educating them that properties depreciate up to 27.5 years. And they may be thinking to themselves, okay, that could be me pretty soon. And then also going to 30 years, you're able to, after they have depreciated their property, you know, it takes them sometimes a year until they do their taxes, and their accountant tells them, hey, you just lost that income, so now it's time to buy. So you're going to get clients that are going to fall into that too, that might have waited too long to sell their property. So what I'm going to do is I'm going to range August 1st, 1990 to August 1st, 1994. That right there will give me my range of people that have owned their absentee properties between 26 and 30 years. And if I do a search for all of Sacramento County, which I'm looking at, it looks like I came up with 1,961 properties that fall in that criteria. Now, if I wanted to narrow that down, maybe I can do that through location. I can open up and look at the cities. Maybe I target the south area of Sacramento County, so I choose, let's say, Elk Grove and Galt. Let's see what kind of accounts I get. 137. So let's say I wanted those 137 targets. I hit View Records. I hit Select Records. And this will give me an opportunity to export these targets into an Excel file, or I can export it into a report and print it, and it'll give me all the information on all 137 properties. So a great tool to use for depreciation, and you can do this anywhere in the United States. All right, the second example I wanted to give you was Leonard talked about people that are selling property here locally and then maybe buying somewhere else where maybe they can purchase additional property. Maybe they are looking for more monthly revenue. So I had a gentleman sell 3 duplexes in the Elk Grove area. He probably got about $1,400 per unit, 6 units. That would be monthly revenue of $8,400. He went and bought 8 duplexes in Nashville, Tennessee, which gave him 16 units, and rent is $1,000 there. So he doubled his monthly income from $8,400 to $16,000. And I'm going to show you how, if your client was interested in that, being that inventory is so low, Leonard mentioned also about the identification process, taking 45 days to identify your property. I would start that process before the home closes. Being that inventory is so down, you can actually go out, and I'm going to show you a few examples of actually targeting the properties that your client's looking for. But let's go ahead. I want to look at this Nashville one because here we have California. Now I want to go to Tennessee. The county in Nashville is Davidson. Okay. I'm going to choose the city of Nashville. I'm also going to choose, I'm going to go under the use codes, and I'm going to choose duplexes. Every county has different use codes for every single property, so we can find any type of property you're looking for using this tool. So here's duplexes. Let's go ahead and hit absentee owned. So these are other investors. 4,000. There's 4,000 duplexes in Nashville that are owned by investors. And if you wanted to even do a portion of those, you don't necessarily need to get all 4,000. You can, let's say, take 200 of these targets and reach out to them, send them a letter, let them know you have a qualified buyer looking for a duplex just like theirs in Nashville, Tennessee. That is something that you can do, and that's something I would work on with your clients before they close their home, before they close their investment to do the 1031, because that 45-day waiting period with inventory being so down is going to be really, really tough. So that would be an example, and that's what they did, and he has now doubled his monthly revenue, and he's hoping those properties also go up in value too. The example I wanted to share, Leonard also mentioned, was age. So if I go into the premium section here, I can actually target using the demographic section, and I can target age. So what I can do is, if I wanted to, I could say greater than equal to, say, 75 years of age is my client. Let's go back to property type. Let's choose single family residence. Let's choose absentee owned. Let's pick a city in Sacramento. Let's choose, oh, I'm still in Davidson. Let's come back to Sacramento. Sorry about that. All right. So let's choose a city. Let's choose Carmichael. Single family residence. Let's go to absentee owned. Let's go to the demographic and put our age in there. Let's say greater than equal to 75 years of age. We've got 167 properties in Carmichael, ownership, absentee owned, age 75 and over. One of the tools that I use quite often with the program, if I'm in this premium section, is equity. I love targeting people with equity. I can say greater than equal to 250,000. See what happens to that count. 167 is now 31. So I can actually use equity if I want to target people with equity. And so I like using that. Another example, so that would be an example of that. Another example would be, even I had a client call me and go, hey, my client is getting ready to do a 1031. They're looking for vacant property that's zoned multifamily, and they're looking in Santa Rosa. So what I'm going to do is I'm going to go to Sonoma County, and let me show you how that worked. We went to use code, and what I'm going to do is, if I go down to the end, I think I've got vacant land. Nope, it was multifamily vacant land. So I'm going to go back up. multifamily vacant land. Again, I'm going to choose the city of Santa Rosa. Multifamily vacant. I don't remember them being that many of them, but let's go ahead and see what we get. So here they are. What's great about our program is we've got the Google map on. I can zero in on a property and see if that would be a possible good property for my client. I can see it right then and there. Let's say I want to reach out to them. I can go ahead, hit reports, open up a report, and get all of their contact information. That's one way of actually contacting the client. I'm in the premium section, so it wants me, when you're in the premium section, just to let you know, and you're using some of these demographics and you're using like loan information and equity, there is a cost. The cost is 6 cents a lead. That cost goes to the developers of this software company. It's Black Knight. And so just to know there's a cost. It wouldn't let me see all of the information because I would have to purchase it. So if I go back to farms and do the same thing, hit the target property that I want, I can actually open up a report. And I'm not sure, can you see this? Leonard, are you still on?
Yep, I'm here, guys.
Can you see the profile? Can you see the profile I pulled up?
I can. Yep, looks great.
Great. Okay, so here is the people that own that property, and here's their mailing address. This is how you would get in touch with them. Here is the site address, and here is the mailing address. So I do get lots of people that use this program to try to find maybe where the owner of the property is, and this is the way to do it. Okay. I'd like to show you another example. So I did have a client that told me, hey, Tim, I've got a listing. I'm looking to sell it, but it's got tenants, and I can't sell it right now. I'm going to have to get them an eviction notice that could take up to 2 to 3 months. But what should I be doing now? And so I said, so tell me a little bit more. Tell me, do the clients want to stay at the property? And they said, yes, they do. And I said, well, how about we target investors that own, let's say we target investors that own other duplexes in that area and see if possibly if they want to own another one. And so the property that he had listed was in this area right here at Petaluma. And I was able to take this tool and draw around the targeted area. Again, I can choose other duplex owners. Whoop. Actually, I want to go to use code. Actually, the use code right now is not letting me pull when I do the map. So what I'm going to do is I'm going to go ahead. I think I have a field in here for duplex, multi-unit, 2 to 4 unit. Okay. And absentee owned, 6. Let's make our area a little bit bigger, because I think we ended up with about 40 to 50. He sent the letter out saying that he has an investment opportunity, and he ended up selling that property in a week. Got a full price offer in a week. Instead of waiting to evict the tenants, he was able to do a quick sale and find an investor that purchased this property. So just another example of using this tool. I did have a great one in Sacramento where I had a client list a duplex in Citrus Heights. Let's go back here to use codes. Let's pull up the duplex. And then Leonard mentioned earlier about people that own multiple properties. So what he wanted to do is target investors in Citrus Heights that owned multiple duplexes, not just one, but multiple. And so we did this for him. He ended up getting 5 phone calls and got a listing out of it by sending out a letter letting them know that he had a great investment opportunity listed with a picture, with a flyer of the listing. And so let me show you how we did the narrowing down and getting multiple multiple owners that own multiple properties. So, Leonard, can you guys see my Excel file right now?
Yep, we can.
Oh, I love it. Okay. So here is our owners that own those duplexes in Citrus Heights right here. What I can do is I can range this alphabetically. And what it's going to do, it's going to show me the owners that own multiple properties in Citrus Heights, duplexes. And you'll see that there's, like, here's someone that owns 2. Here's someone that owns 2. Here's someone that owns multiple. Here's another LLC that owns some. And so what we did is we got rid of all the onesies and we lumped all the people that had multiple properties, and then we eliminate duplicates. And he sent a letter out, I think there was about 70 of them, to those people with a flyer, and he got 5 phone calls and a listing from one of those investors. So a great resource for that type of search. And so again, just reach out to any Cornerstone representative. We can get you logins, we can meet with you, we can do a Teams meeting just like this, we can share our screen, we can help you build farms. We're available to help you grow your business. Does anybody have any questions?
All right, Tim, it doesn't look like I see any questions coming over. So if you do have questions, type them in. Now's the chance and the opportunity to get your questions. If there are no questions, we're going to go ahead and wrap up. So Erica actually wants to know who she can contact regarding the farming tool, and that would be Tim. So I'm going to go ahead and share my screen, Tim. I've got our contact information, both of our contact information on here so people can get it. So let me see if I can figure out how to get my screen back up. And someone also has a question while I'm doing that. Can residential property be exchanged for commercial property? What do you guys think? So remember, all investment property, all properties used for investment or business purposes will work. So absolutely, you can sell residential property, you could buy commercial, you can sell any type of real estate and buy any other type of real estate in an exchange as long as it is used for business or investment purposes. Now, one other question, Peter says, can I sell 2 properties and buy 1? Absolutely. So when you do that, you want to make sure when you're selling 2 properties and you buy 1, that the 1 property you buy is equal to or greater to both of the ones you sold, so that you don't have a tax bill, right? So let me give you an example. If you sell 2 $500,000 properties, all right, I like to write on my screen here, you're going to want to buy $1 million property or more so that you don't have any tax bills. Now, what happens if you go down in value? Well, when you go down in value, you pay taxes on the difference. All right, so it is possible to do what's called a partial exchange, but when you do a partial exchange and you trade down in value, the difference is taxable. All right. So my contact information is on the screen. I really encourage you guys to put this phone number in your cell phone and just put me down as your 1031 guy, because you're going to take this class and you're going to think, well, geez, this is all easy stuff, but you're not going to have a 1031 exchange question maybe for a couple months or maybe a year, right? And you may forget all this really good information, and put me on speed dial and we'll make you look like a hero and get your client's question answered right away. Also, Tim's phone number, put this in your cell phone. You're going to need an escrow company, you're going to need title, and you're going to need these farming tools. So reach out to Tim if you want to get these farming tools set up. Super easy, right, Tim? And there's no charge to what Tim's offering. So this is all free of charge. I think some people have asked me what my company charges. We don't charge anything unless your clients do an exchange. And then to set up an exchange account, we charge $750 when the client sells their property, and then $250 when they buy replacement property. So most of our clients are paying a flat fee of $1,000. There's no hidden fees, miscellaneous charges, or anything like that. All right?
Hey, Leonard.
So I always tell, yep, go ahead, Tim.
I just want to give you a plug. Leonard is an incredible resource of information, and if your client has any question, and no question is a dumb question, if they've got a question about real estate and exchanges, Leonard is always available to answer those questions and talk to all of you together. So just wanted to say that we get a lot of positive feedback back from people that we refer to Leonard. So thank you, Leonard.
And likewise with Tim. I mean, we send a lot of people over to Tim to do these farming tools, and they get listings all the time because of the resources that Tim and Cornerstone have. So use us both as resources, guys. We're here to make you guys better agents, get you more commissions in your pockets. And in the meantime, we want to do some exchanges and earn some fees, and so does Tim with his escrow and title services. So use us as a team, and please do keep our contact information. Look forward to working with all of you very soon, and there's no more questions. So we're going to go ahead and log off and go have lunch. Have a great Wednesday, everybody, or today's Thursday now, right? I don't know what day it is today. I'm homeschooling kids too, so my days are all blurred. But have a great Thursday, everybody, and look forward to doing business with you all soon.